Hello there, my future charters. Welcome to paper discussion series by Mora Academy. In the previous video, we discussed a calculation problem of inventory valuation by weighted average method. In this video, we will discuss a theory question having 4 sub-questions. So, let us start. Question 1C. Explain the following. Now here you can see that the question has not specified what should be the length of your answer. It just reads explain the following. Being a part of compulsory question, one may feel like writing a lot for each point. However, I would like to draw your attention to the marks assigned for this question. The question is asking explanation for 4 points. All are compulsory, and in total, this question has 4 marks only. It means each of these questions carry 1 mark each. It means you are expected to explain each point in 1 sentence. At best, you may write 2 or 3 sentences, but anything more than that is non-productive and time consuming. With this in mind, let us consider the first statement. C. Accrual basis of accounting. Now you all are aware of the 3 fundamental accounting assumptions: going concern, consistency, and accrual. Accrual means recording the transactions as and when they arise. The actual movement of cash is not important. When the right to receive something or an obligation to pay something arises, then the same is required to be recorded immediately. Movement of cash may take place at a later point of time in future. So how to write for the same? Accrual basis of accounting means the method of recording transactions by which revenues, costs, assets, and liabilities are reflected in accounts in the period in which they accrue. That's all for 1 mark. Okay, so let us consider next point. 1C2, amortization. Now, what is amortization? Amortization is just like depreciation, but it is in relation to intangible asset. When an asset is created or when an amount is spent for an intangible asset, it is having a finite life. So over the period of expected life of that intangible asset, it is required to be written off. Then it is called as amortization. On the other hand, if it is a tangible asset, then it is called as depreciation. So basically, amortization is the process by which you are writing off an asset over the period of its expected useful life. So the answer which can be written is gradual and systematic writing off of an asset or an account over an appropriate period. So the most important words here are obviously gradual and systematic. And the next important word or next important phrase is over an appropriate period. These 2 different things, gradual and systematic and over an appropriate period, must be there in your answer. And if possible, I would prefer to write an intangible word here preceding the word asset. That would give more weightage to that particular thing. Okay, so that is what is called as amortization. C3, contingent assets. Now you are all the students of law, so you already are aware of the concept that is called as contingency. So contingent asset means the value of the asset is going to be determined on a future uncertain event. Then it is called as a contingent asset. The very good example and easy example of contingent asset is probably a court case which a company may win, which may generate some specific amount of revenue for the company in future. But whether the court case will be won by the company or not is not known. Therefore, such particular outcome of the court case, the possible revenue which the company may earn, is not going to be recorded as an asset immediately in the balance sheet of the company. It will be shown maximum by way of a note to the accounts. It will not be shown as a part of the accounts because it is not recorded. Why it is not recorded? Because it is contingent. So what is the definition of contingent asset? An asset, the existence, ownership or value, either of the 3 things, whether it is there or not is not known. For example, there is some gas field which we are thinking of, or maybe an oil field we are searching for. The existence, it is not yet known. Or ownership, are we going to be the owner of the same or not? Or the value, we are sure that we are the owner, but how much value will be assigned to us, that is not known to us. So either of the 3 things are not known: an asset, the existence, ownership, or the value of which may be known or determined only on the occurrence or non-occurrence. These 2 words are important: occurrence or non-occurrence of one or more uncertain future events. So what are the most important points which you should write in this type of question? 3 different elements of the contingency, either the existence of the asset or the ownership of the asset or the value of the asset is ambiguous. Next, it is dependent on a future uncertain event, and the future uncertain event may be occurrence of something or non-occurrence of something. So these are the different points which should be mentioned in your answer to get full 1 mark. 4. contingent liabilities. Now, if you are in a position to answer the question of contingent assets, it's very simple that you can answer the question of contingent liabilities also. Everything else is same except we are not talking about an asset, but we are talking about a liability. So the answer is an obligation. Earlier it was an asset. Now it is going to be an obligation relating to an existing condition or a situation which may arise in future depending on the occurrence or non-occurrence of one or more uncertain future events. So it's an existing condition we may have to pay. But whether we will have to pay or not, that is going to be dependent on a future uncertain event. Maybe a court case is fought against the company for breach of certain assets or certain IP rights, or maybe a court case is going against the company in the labor law or labor court, whether the company may have to pay some extra compensation to the workers or to the customers, or maybe some IP right violation, etc., is not yet known, or maybe there is some tax case which is going on against the company. So the outcome will be dependent on the future judgment which is given by the court. In that case, that particular liability is recorded as contingent liability. So the answer to be written is an obligation relating to an existing condition or situation which may arise in future depending on the occurrence or non-occurrence of one or more future uncertain events. So here you complete question number 1 completely with all the 3 different subparts. A was about true or false give reasons. B was about a calculation question of weighted average, and then question number C is a theory question asking you to write an explanation in 1 line. So here you complete your first 20 marks. Let us now go for second question. In the next video, I'll talk about the second question which is having a lot of calculation. So see you in the next video. Thank you.